you're doing well. It's now the middle of September 2024, and we are looking at a new daily read on the VEPs, volatility, entropy, probability, and statistics. And today is obviously the end of the week for the Bitcoin and crypto charts in general, as they, by and large, start their new week at 8 p.m. Eastern Time on Sunday. And then, obviously, we get the new weekly projections once that happens. So far this week, we've seen Bitcoin move up nicely on the weekly and the daily. Daily has closed above the power mean now 2 days in a row. Right, it closed above it on Friday. And then on Saturday, it had a nice move a little bit to the downside. The reverse wave trend to the downside, and then moved back up a little bit towards that first Laplace to the downside on the Laplace bands. So the 68.2%, it was pretty close to it. It was a little bit south of it, but not much in Bitcoin terms anyway. And it did test the central daily range, which was, not very tight, but under the 2% threshold. And there was, in fact, a little trending move on the 15-minute time frame on Saturday, but nothing major or significant, which is kind of to be expected, given the indicators, right? And given the information we had going into Saturday. And yes, it was a trending day, but not anything massive. And you really could say, it just kind of ranged sideways, but mostly, it just, there were trending moves on the lower time frames, obviously. Like, 3 minute, the 1 minute. Plenty of those there. If you want to catch little, $100, $200, $300. And today should be no different. Today, it should be no different. No shortage of occurrences of opportunities to exploit in the random market that is Bitcoin. Right, well, there will be trending moves, right, on low time frames, as there always are. And in fact, the central daily range is so dang tight, right? And today it is very tight. That it is most probably a trending day, right? And so don't be surprised to see potentially some nice movement. At the moment, the AVRs are kind of looking mostly to the upside, but not all of them, right? One out of three lengths that I typically use is still looking to the downside. I appear to be in some place with spotty coverage. I don't know what the deal is. I'm trying to get to you guys. Hopefully it works. Anyway, with the falling with positive correlation, that does indicate ability of price go down on the daily time frame. And since 1 out of 3 AVRs is saying price go down and 2 out of 3 are saying price go up, it tells you that there's a good probability of having a bunch of low time frame scalps available, because you've got one major indicator saying, yeah, price is kind of going down, the other indicator across 3 different things, mostly up, but one down. So that tells you basically that it looks like it's going to be a day with some trending moves and scalps on both sides. So I wouldn't ignore what that says. I would say, keep your eye on those low time frame trades, because they will probably be rife today as the market gets set for the new weekly time frame and for the new day tomorrow when the traditional markets come back online. Obviously later today, the CMEs open up. That includes those Bitcoin future contracts. I don't know if you heard, but not that it matters to the reps, but it kind of matters because they're basically putting a new product on because nobody wants to buy, apparently, or very few people are buying Bitcoin futures on the CMEs relative to the amount of people who are buying just either Bitcoin underlying asset or other derivatives like, Bitcoin ETFs. So, yeah, even, investors who have the necessary capital to trade Bitcoin futures on the CMEs, they basically never really brought a lot of business to that particular market, which isn't a surprise, right? It was very well gate kept, as are all those markets. And, if you're an accredited investor and you didn't get into it in the first, whatever it was, 7 years, 6 years, right, since the end of 2017 until the beginning of 2024, so all of 2018, all the way through all of 2023, that's, 6 years, right? 7 years. If you didn't, 6 years. If you didn't get into trading in Bitcoin as an accredited investor on the CMEs between basically 2018 and, or the end of 2017, the beginning of 2024, there's a very high probability that you're not into it now, if you weren't into trading it then. And now, if you were suddenly interested in it, who would you look to? Would you look to the CMEs? Maybe, but there was incredibly low volume, or would you look to, BlackRock ETF, or, invest in MicroStrategy, or whatever it is, any kind of derivative or derivative of a derivative, or, company that's investing in Bitcoin as their treasury? What would you do, right? My guess is probably not run to the CMEs, right? Which is funny because for a number of years, there were some people saying, oh, it's the most important Bitcoin chart, which I always thought was hilarious because, why do you think that's the most important Bitcoin chart? Oh, because that's where the accredited investors are trading Bitcoin. Yeah, but they're trading like 20 Bitcoin a day. Like, it's a joke. Whatever the number was. I remember at some point it was like 2 Bitcoin a day. When the price wasn't 70 grand, even, it was like 20 grand or less, 10 grand. Like, why would anybody give a damn about that chart? But there were people who, probably because of previous experience, right? And I can definitely name one who's a very well-known YouTube Jimmy kind of guy who likes to shill his indicators and all that jazz, his courses and everything else. He's always talking about the CMEs. I don't know if he still does. I haven't watched that guy in years and years. But when I did watch him, he had, at least tens of thousands of people, watching his or following him. Thousands and thousands of people watching his videos every day, talking about the CME chart. Like, it's completely, unless you're trading that chart, it's a completely irrelevant chart. But whatever, some people go by it. Just think it's hilarious. Like, I'm talking about a Bitcoin chart that shows a volume of trading so low, it's basically negligible. Really negligible, right? Like, not like, oh, there's just not a lot of volume relative to other exchanges, but it has decent volume. No. Like there are definitely individuals who aren't even whales who have way more Bitcoin than the volume of Bitcoin that have been traded on CMEs for very long periods of time. I don't know what they're... Frankly, I don't look at it right now. Like, I haven't looked at it in, quite a while. Because, like I said, it's moot. It doesn't even run 24 hours a day, obviously. traditional market asset. So it's like looking at a chart of a derivative of a thing that runs 24 hours a day and has such incredibly low volume of traffic, of trading. Therefore, it has not interesting VEPS information because, you can still calculate it, but it's a joke, Now, why am I trashing on the CME futures chart of Bitcoin? It's not that I'm trashing on it. I'm just pointing out the fact there are people who put way too much weight and emphasis on it and think it matters way more than it actually does. Right now, if suddenly thousands of coins, were being traded on it every day, okay, then maybe we're talking about something interesting at some point, or at least it's worthy of observation, more than just saying it has nothing. Right? It's a dead chart, basically. And I know it'll probably remain active for a little while, at least until they decide to kill it. But the reason I mentioned it in the first place is because, due to the fact that basically nobody is trading it, they've now reduced the amount required to trade it from, I think it was like you needed to have 5 Bitcoin before. Maybe it was 10 or 5, whatever it was. Whatever it was a small number. I mean, for accredited investors, yeah? Especially back when it cost like 10 or 20 grand a piece. It was a relatively small number for people whose net worth is at least 5 million or 10 million or whatever. So anyway, now you don't have to trade 5 of them minimum. Now it's like 0.1 minimum. Right? So funny how in a matter of like 6 years, 7 years, right, since derivatives on traditional markets and margin trading was allowed and all that stuff, since then, basically what's happened is that there's, first of all, so little Bitcoin left that not everybody who's an accredited investor necessarily has 5 Bitcoin to trade with. And even if they did, they probably don't want to put all of them on the line, or most of them. And that chart is so not popular and is so irrelevant in the space, right? And Bitcoin has become so much more valuable at the underlying price level. It's not 5 or 10 or 20 grand anymore. It's now $60,000 or so. And, it's been up to 74. So it's in that range, right? Still not 100 grand, but, more than 50 usually, right? For now. So it's gone up significantly in price in the last number of years. This is the last 4 years or so. And that means that people who are even putting 0.1 Bitcoin on the line are putting 5 grand on the line, basically, which, isn't a lot to an accredited investor who's got a net worth of millions. But, it's not a tiny amount of money in real terms. It's not a negligible amount of money. So people still are putting some risk on the table, even with 0.1, but not so much. So that, an accredited investor can be, it's just 5 grand, put the risk on, no problem. Right? And that's the minimum amount to trade. At least I read that recently in the news. Now, why do I mention that at all? Since I basically don't pay attention to the news in Bitcoin at all. Okay? I only mention it to demonstrate that particular coin chart, right, a particular asset chart, is growing increasingly irrelevant. And I expect it will probably fade away in the coming years. It'll probably stay active for, my guess is anywhere for, 1 to 5 years. Like, if they're already announcing that they went down from like 5 coins to like, you have to put 0.1 on the line, what's next after 0.1? They're going to allow people to trade 0.01? I don't think so, right? It's an asset chart for accredited investors. They're supposed to have millions of dollars in net worth. That means that they shouldn't be bothering to trade an asset worth 50 grand at a rate of 0.01 of that asset, right? Like if they're not putting 0.1 asset, 0.1 Bitcoin on the line, kind of how serious are they, you know? So I imagine if it's already at 0.1, like they went straight from 5 to 0.1. That's about as low as you can go, right? Realistically, at least in 2024. You know, if they don't keep this thing hanging on for another 10, 15 years until maybe the price of Bitcoin reaches somewhere in the millions of dollars as the floor price, then the probability is that it's going to be gone within 1 to 5 years, that chart. I mean, with all, yeah, maybe it'll never go away, right? Well, who knows? Maybe it's on there permanently. But my guess is, who wants to trade a thing that no one's trading? Like if no one's trading the CME futures of Bitcoin, it becomes an irrelevant asset for them to offer if it's not making them money. Right? How does CME make money on that asset? Fees, right? Trading fees. If they're not making money on trading fees on that asset, and because nobody's trading it, then why would they keep it listed? Right? They'll delist it. It's not like nothing ever gets delisted, right? And it shouldn't surprise anyone if it gets delisted, even if it is the most, volatile and sought after and rare assets on the markets. Their derivative of it is clearly not. So anyway, that is the news, if you will, about that particular bit of info in the Bitcoin world. Hopefully you found it useful. But I mean, again, you don't trade that information. That's just random kind of news. I just found it interesting that a chart that is so popular among so many traditional technical analysts, is really increasingly demonstrating how irrelevant it is, and will probably soon be, within years, will probably soon be not a thing that any serious trader actually looks at. Let's just put it that way. If it doesn't get delisted, it'll at least be ignored by the vast majority of serious traders. We'll just be like, yeah, whatever. They have that thing, but nobody pays attention. Anyway, that's going to do it for now. Hope you all have a lovely day. And let me remind you that if you want to trade volatility, probability, and statistics, the best way to do that is to learn how to trade probability and statistics, volatility, probability, and statistics using Bitcoin's Alpha free tools. Yes, they are free. You can use our volatility starter kit, which is available for free. If you go to again, that's alphatradinghq.com/discord. If you go there, you'll see a channel called Request Support. If you go to the Request Support channel, you'll see that you can create a ticket by pushing a button that says Create a Ticket. Once you create a ticket, you can just request access to the free volatility starter kit. And once you give us your TradingView username, so we know what TradingView username to give the tools to, you will have free access to those amazing tools. And they are entirely yours to keep forever and ever and ever. Out of Discord, but don't leave our server as long as you remain a member of the server. server. It's free to join and free for you access to the live. And those live streams occur Monday. Get access to the live stream Friday. And it typically happen unless it's a holiday, or at least at the moment, starting at 9 a.m. Eastern time. That may change at some point in the future with some scheduling changes and stuff. But for now, that is the open, and that way you can see, obviously, because there's usually a lot of activity in that run up to traditional market open and in the first hour of market. If you miss the first hour, chunk of the move, and if you know what's coming because you've been paying attention, like or 2 hours. If you skip 2 hours of the trading day is only like and that happens. Obviously, the bots are running trades 24/7, but the managers who are looking at their reports, they're not sitting at their desk 24/7 running trades, right? They're letting the computers do their thing because they have extremely high-powered computers and they have tons of people on staff. What up there? They have tons of people on staff running those trades, making sure that the trades happen as they're supposed to. And if there's any crises that the managers have to look at, the people working on those systems alert them. So that's how, you have a culture where people who are basically traders in big shops, actually like managers or traders, sitting at their desk all day and they're out playing golf a lot or doing whatever they like to do. Go to restaurants and bars or hanging out or I don't know what, taking extended naps, whatever it might be. They're not just hanging out in their office, right? We know that. And the reasons for that are quite obvious. So anyway, thought I would mention that. And hopefully it is useful information to you. And that's going to do for now. So yeah, see you in the next video. Happy trading.